Event less than 24 hours away as markets get ready for the UK referendum vote on whether Britain will stay in the EU or not. We at CNBC TV 18 get you a special poll of banks and brokers on some asset classes and how the markets are approaching their positions and levels. Manisha Gupta, commodities editor, did this poll single-handed, and so she's best placed to tell you what the poll results were. Manisha.
Thank you so much, Lata. And as you have been discussing since morning with various global and Indian analysts there, well, most of them really have priced a remain in. So it would be, of course, a huge shock if you actually see a Brexit going through. I would really want to start with the currencies, and we've only spoken to bankers in India and abroad for this one. And starting with the rupee, because that is what would really, make an impact into our lives here. So we are looking at a rupee. First of all, let's go with the Brexit situation first. The rupee might see a decline at 68 is what 50% of people do feel. They do not see a knee-jerk reaction coming in for the currency. Most of them said that as the way emerging currencies would move is what you would see the Indian rupee moving as well. 68.5 is something that 40% of people want to go with, and only 10% said that a 69 of a level can be seen in the markets tomorrow itself. And 100%, almost every banker we spoke to really said that you will see an intervention coming in for the Indian markets if the rupee does tend to slide more than a 1 percentage point there. Well, in case of there is no Brexit, you will see an appreciation coming in for the currency, as already has been the case in the markets today as well. So in that case, 66.5 is your best case scenario. 70% of bankers have gone with that level, and 66 is something that 30% say in case you see that kind of an appreciation in other high-yielding and emerging market currencies. Well, a quick word on the GBP as well. Well, we have seen the pound gain from 1.40 to 1.48 on the higher side. It's trading 0.5% on the higher side today as well. So if there is a Brexit, you will see a very sharp correction coming in for the currency. 1.30 is what many of these bankers are working with. But in case there is no Brexit, then we already have priced it in, and 1.50 to 1.55 is your best case scenario there. Of course, going ahead, there are various things working in for the market as we have been discussing. You have a better monsoon, GST may be passed, the CAD and the Forex reserves are on a better side as well. And of course, the FDI inflows have been good too. Talk about the other asset class, and that really is commodities. And we have seen a lot of move coming in for that as well. The gold prices have seen a range between 13.15 to 12.60 already. It has been quite volatile in last 10 days. If there is a Brexit, you will see a level of 13.50 coming in immediately. Remember, we are pricing in a remain. And if there is a Brexit, there would be a lot of buying coming in for gold. So 13.50 is what 40% of people have told us. 1400 is a very strong number coming in, so 50% people are going with that. 1450, 10% of people believe. If there is no Brexit, you can see prices decline all the way to 1245, even 1200 on the lower side. The crude prices as well can see a lot of move coming in. We are trading at $50 per barrel. If there is a Brexit, you will see prices going to 45 is what 60% people say. And in case of no Brexit, $60 is what 40% are working with right now.
Right. Thank you very much, Manisha, for joining us with all those details.